Guten Tag, ladies and gentlemen. Welcome back to another one. In today's video, I will discuss the anatomy of a long straddle. What is a long straddle? If you believe a stock is about to make a huge move, either up or down, and you're not sure which direction, but you know that it's going to make a really big move, you can deploy what's called a long straddle. Let's say I expect Tesla to make a huge move, either up or down, but I'm not sure which direction it's going. I could select the strike price. I'll choose 710. I'm expecting it to move from its current price, right? Or approximately near its current price. There is no $712 strike price, so that's why I'm choosing 710. So you buy a call at this strike, and you buy a put at the exact same strike and the exact same expiration. Very important. When you're deploying a long straddle, you have to select the same strike for your calls and puts and the same expiration, or else it's not a long straddle. Okay? If you're ever having doubts of the strategy that you've created, simply go to Profile, click on Trade. Don't worry, it's not going to execute it right away. And what do you notice here? Voila, a straddle. And I know it doesn't say long straddle, but it is a long straddle after all. Because remember, the long position is always the what? The buying position. Look at that, buy here and a buy here. It's going to result in a net buying. That's why it says net debit here. Okay? A long position is always the buying position. And as you've noticed, it's costing me 69.15, right? But remember, ladies and gentlemen, you have to multiply this number here by 100. That is the nature of the options realm. Whatever price they give you, it could have been a credit, by the way. Whatever price they give you here, you have to multiply by 100. So my max loss is in fact $6,916. I know it's off by $1 here, but it's because of the bid and ask spread. That's why it's a little bit off, but you get the gist. It's approximately this amount. And my max return is how much? Oh, how high can a stock get to? It has unlimited risk, unlimited profit towards the upside, right? There is no limit to how high a stock can get to. That is why the max return reflects this concept and shoots out the infinity symbol, because the max profit is infinite towards the upside for the straddle. Towards the downside, you have limited profit. You still have profit, but it's limited towards the downside. Why? Because how low can a stock go to? Zero. You can't go lower than zero for a stock. It's impossible. Now, another important factor is the break even. You need to factor in your break even always whenever you do a strategy. It can be any strategy. It can be a simple vanilla call or put, right? But you always need to take into account the break even. Now, how do I get this number and this number? It's very simple. My broker simply took the strike price, they subtracted 69.15 or 69.16, right? And they got $640.84. And how did they get the upper limit? Well, they simply took the 710 strike price and they added it to the 69.15, and they got approximately 779.16. Now, what does this mean? Well, as I said before, the straddle is the strategy you use when you're expecting a really big movement. But how big? The magnitude of the movement needs to be at least $69 towards the upside or $69 toward the downside. If it is at least this amount, right, you can either break even or you can profit. Now I want to show you the profit graph, However, I'm not a big fan of this standard profit graph that they give you on interactive brokers. It's not aesthetically pleasing. So we're going to head on over to option strat. Now look at this. I dare you to tell me that this isn't visually appealing, right? Now I will state the numbers are a little bit off. It's just the nature of option strat. I think they have some delay, so the numbers are a little bit off, but it's still the same concept. You notice the two vertical blue lines, this one and this one, they represent the break even, and the middle is obviously the strike price, right? It's the strike price that I've selected, about 710. Now, as I've stated, the numbers are a little bit off, but it's still the same concept. What do we notice? If the stock does not move, or it moves by exactly, $68.71, right? I will break even. If it moves less than that, I will incur a loss. What do you notice? The further I go left, what do you notice about my losses? They start increasing all the way to $68.71 approximately, right? So if it doesn't move towards the upside by at least this amount, I will have a loss. If the stock does absolutely nothing, it doesn't move even by $1, then I'll have a max loss of $68.71, right? Which is actually multiplying it by 100. So I'll have a max loss of $6,871. That is my max loss. The same intuition for the downside movement, right? If I don't have a downside movement of at least $68.71, right, I will have a loss here as well. And then once again, the max loss is $6,871. However, if my move is greater than $68.71, that's where I profit towards the downside, and I also profit towards the upside. And how much can I make towards the upside? It's infinite. Whenever you have a strategy that has potentially infinite profit or infinite returns, you will always see infinite here underneath the max profit. It's infinity. Just like it was displayed here, your profit is infinity towards the upside. Well, that's the breakdown of the straddle. Hope this helps. If it does, please comment below. If you have any further questions, as always, I don't bite. Let me know in the comment section. I hope you enjoyed this video. And on that note, have yourself a fantastic weekend. Thanks for watching.